The latest World Bank report has analyzed the global economic landscape and factored in the impact of the major global and regional events, including the conflict in Ukraine, U.S. monetary policy tightening, and the pandemic resurgence in China.
We believe that the Ukraine-Russia war is perhaps the most serious risk to the region. We're absolutely right to emphasize that the production disruptions themselves and the accompanying sanctions and the fear that worse is to come has led to big price increases. We worry that these price increases might persist for some time, but hope that if the war is over, they might fall, though not necessarily to pre-conflict levels. These are going to put more pressure on inflation. They're going to squeeze consumption.
According to the report, projections for growth in the EAP region in 2022 have been reduced from 5.4% earlier to 5%.
In terms of financial stimulus, China faces a challenge between, how much to preserve growth and how much it might compromise the possibility of longer-term stable growth. So that's the trade-off, because there are financial vulnerabilities, there is imbalances, you need to fix them. But if you fix them a lot, then you might have to sacrifice growth. If you focus on growth, you compromise somewhat the long-term stability.
The conflict comes on top of not just the lingering pandemic, but other developments.
This is a problem, particularly for countries with higher external financing needs, in particular those who have large debt. Because, as you know, there is a threat of capital outflight. But the good news is, number one, that the region has real interest rates which are significantly higher than the real interest rates in the United States. So there is no reason to immediately panic, because there is room still to provide monetary support without risking.
Despite the grim scenarios, there are still some bright spots, according to the World Bank. The reports add that both fiscal, prudential, and trade reform and policies to stimulate innovation could help EAP countries avert risks and pursue new opportunities.